With our next guest of the show, we have joining us Feroze Azeez of Anand Rathi Wealth. Feroze, good afternoon. So good to have you here. I want to understand about markets at this point of time. We have brushed aside earlier volatilities, be it your Kargil war or even Balakot strikes. We have brushed aside any kind of volatility. Do you expect the similar to happen this time as well, given that we are seeing good set of gains today too?
Yes, Lovisha, I personally think that yes. Like you rightly alluded, the fact that we've had about four or five instances where the matter between India and Pakistan has got escalated. Unlike this time around, when the escalation has happened the last few times, there has been at least a knee-jerk reaction on the first couple of days. But this time around, we have not even seen that. And last 4 or 5 times, the market has recovered before, by the end of the event, almost subsiding. So this time around, you've not got a knee-jerk reaction. Because the kind of retaliation we have done and what kind of response would Pakistan do is yet to be seen. But having said which, why has the Indian markets reacted so positively on a day when this breaks out? It's because of two reasons. One, in the past few times when this has happened, there was no short limit in India. Short limit by which I mean, there is a circular which came 5 years back in March 2020 before the lockdown, that in Indian capital markets, a person can't wake up and sell as much as he wants to, which is called short selling, without owning the asset. That is limited to as little as 500 crores of notional. So, agar koi subah uthta hai and he does not have a shorting limit, then speculative activity is lower. That's one. Second, we have already returned 4 lakh crores over the last year to FIIs on the pretext of valuation. So it is never about the news. It is about when the news came. If the news came when the markets were at 26,200 and FIIs are yet to sell, then the same event could have resulted in a 4-5% down move, which didn't happen today because we've already, जिसने बेचना था वो बेच चुका है. So the power of the news, even the Trump trade war, got dissipated because it came after a large portion of almost a $500 billion of selling.
Okay. Feroze, what about, the going ahead? Because right now everybody is banking on FII flows that, from the past 14 sessions, they have been net buyers of the Indian equity markets. But today, if you look at the rupee front, that has, marginally depreciated given the cross-border tensions that is ongoing at this point of time. So do you see any currency volatility to weigh in on the FI sentiment, or what are you basking in on that perspective?
See, like you said, that FIIs have been buying marginally. See, I don't get too carried away with the sign of the amount, positive or negative. It is about the quantum. You have sold 80,000 in Jan, 40,000 in February, about 10, 20,000 in March. March end, say they've been buying marginally, and 4,000, 5,000 crores in April. So that's what they sold in a day in January. So, of course, it is good that a negative sign has become a positive sign. But it's never about the sign. It's about the magnitude or the quantum of money in that sign. So point one, selling is not happening. That's why the markets are resilient. Domestic guys are going to buy if you do algorithmically, we run algorithms to find out what kind of money came into mutual funds day before yesterday. Even in small cap, there was a purchase of almost 222 as per our estimate. 222 crores came in one category, which is small cap. So domestic guys are continuing to give money. That's a tick mark. FIs have stopped selling. I'm not too excited about their buying so much. But they've stopped selling. That's why you see resilience. FIIs have unwound their future shorts because of the market move. The future index future short of FII, which was about on 8th of March, it was almost 80% short, has now come down to almost about 51% short as of yesterday. The implied volatilities, you see tomorrow's option, tomorrow being an expiry, a put option of 24,400, 24,300 is quoting at about 60-70 rupees. That's one of the least volatility you will price in on a day like this. So a range-bound market movement, even for the next couple of days, is what the options market is screaming at the recipient of the data.
Okay. Feroze, but any uncertainty in the market, that means that the investors are going to be skeptical, they're going to remain on the sidelines. So what does it mean that investors should do for the upcoming 4 to 5 sessions that is going ahead for the overall markets? Do you expect that the volatility is still going to keep the overall sentiment quite bogged down?
See, I personally have a fundamental difference of opinion when people call volatility without doing the numbers for it. See, as per the market is not a fixed deposit, right? It keeps going up and down. So the minimum volatility per day is expected to be 0.7% on indices every day. उतने की movement तो आपको लेके चलनी है. Anything more than that is what is called volatility, excess volatility. Any variable like market has a standard deviation of 16, 15 per year. Per annum standard deviation of 15, 16 is what Nifty has thrown up over the last 1 year. Right? S&P 500 throws up a volatility of 17% for the last 1 year. So S&P 500, which is such a large global index, which controls 50% of the world's market cap, is more volatile than Nifty, which is only 3% of the world's market cap. Firstly, Indian volatility is significantly lower than it should be, point one. If you are saying that Nifty is 100 point niche, 100 point upar ko, there are clients who call it volatility. Standard deviation of 15 means 0.8, 0.7% movement in indices every day. If you're moving 2% every day for the last 10 days, then I can say it is heightened volatility. So people have to provision for 15, 16% standard deviation, and any volatility beyond that, I don't expect to happen, is the point I was trying to get to.
Okay, Feroze, let's keep aside the geopolitical tensions at the side for now, and let's talk a little bit about earnings. Because last time that we spoke about, you said that the earnings have been quite better than what we were anticipating as well. So, what is your estimate for FY26? Given that the Q4 earnings from top 100 companies, which contribute about 60% of the market's profits, they have come in better than expected. So, would you say that FY26 is from quarter 4? It's a good signal for FY26 for the India and going ahead?
See, for the Nifty earnings estimate for FY26 remains at 1300 for us. 1300 rupees is our earnings estimate. We were estimating to close this year at 1154 for Nifty's earnings this year. Of course, 3 quarters have come in. 787 is the last 3 quarters, the first 3 quarters of this last financial year, has earned 787. So we have 366 more to go to win the match. Or if I call the estimate of 1154 to happen. That looks a little unlikely. So 1130 seems to be my revised number. 26 Nifty companies, which is 66.6%, have already given results, and they've given almost about 188 rupees. And we have another 33% to still declare results. So coming back to your pointed question, we stick to 1300 as the FY26 number. In rupee terms, if 1130 is what we end this year at, then you have 170 rupees earnings expected. That's a 12 to 13% earning growth expected on this year's base, which is expected to form in the next 10 days. We should have most of the results coming in. Then in the broader market, we have seen only 48 mid-cap companies out of the mid-cap 150 having declared results. Only 30% of them have declared results. And we have only seen a 3% growth in the earnings. And in the small cap space, which is again very startling, that 194 companies are yet to give the results. The ones which have given have degrown by minus 7.6 so far. That's what the scoreboard reads, which most people don't track till the match is over. So we look at the scoreboard every single result and we update it. So minus 7.6 is the small cap results for quarter 4. And I think that's where there is going to be some surprise. But some large weights with bad results are skewing this number, which will get normalized once all the 250 companies have given the results.
Okay. Feroze, anything that you like from a sectorally perspective, and where are you finding comfort at this point of time in the markets?
See, I personally think any sector which has been beaten down unwarrantedly, and I think IT is a contrarian bet I would take. Everybody has been speaking of the theme saying that let's look inward because there are global uncertainties. I would say that theme is already overdone, and the kind of capital which has moved to that theme doesn't give me comfort significantly. So I would say I would be contrary from a 2-year perspective. Nifty IT can beat Nifty by about 4 to 5% per annum with a 90% probability.
Okay, but most of the managements have been quite cautious on the FY26 guidance also. Even if you look at some of the top players, be the likes of TCS, even HCL Tech, all of them have indicated a very cautious start to FY26. So would you still say that the tariff uncertainty which the markets were pricing in, that they have been brushed aside and we can look for good times ahead?
One thing I like about large IT companies management is they're undercommit, over deliver. Generally, they're not so upbeat. You see them, they're not like some of the cyclical business promoters or professionals who project a very rosy picture. So I would say Nifty IT has been one of the best results. 8.3% is the result for the first 9 months. This year we have got 9 IT companies who have from Nifty IT who have given results, and there is almost 94% of that is done. We've got about 4-5% growth, 3.94% growth in the last quarter also. Of course, the kind of shares which have changed hands, it has changed hands largely from FIIs to DIIs, which is better than changing hands from FII to retail, in my opinion. That's why if they're cautious, rightly so, and that's when you're supposed to buy stuff rather than when there's so much upbeat news about a specific sector.
All right. With that, we have to let you go, Feroze. But thank you so much for your time and hope that we connect with you soon.